PropTech Lagos is brought to you by JLL, Lend-Lease, and is powered by Unissu. Tosin Ajose discusses PropTech and the capital markets, mapping to the road to the future.
My name is Tosin Ajose. I'm a commercial lawyer out of Lagos, Nigeria. I am a partner and lead advisor at Deal HQ Partners. Deal HQ is a boutique commercial law firm out of Lagos, Nigeria. And I'm going to be talking about PropTech and the capital market, the road to mapping the future. For us to understand the real estate capital market, it's good for us to know that it is a segment of the bigger capital market, and it has come to be recognized as a specialized market where securities that are backed by underlying real estate assets are created to raise capital for the sector. In return, investors who bring money into the real estate capital market get the opportunity to share out of returns from the cash flow of the underlying assets. The market as we know it has come to identify the real estate capital market as having these features. One, it's a sophisticated market segment that has grown to have its own products, its own rules, and its own players. Two, it's also known as having the highest number of alternative products. One, you can have equities of real estate companies, you can have real estate investment trusts, you can have mortgage-backed securities, you can have asset-backed securities, you can have collateralized debt obligations, collateralized mortgage obligations, real estate funds, specialized real estate bonds, notes, and the like. So second, real estate instruments are recognized as a single global inflation hedge type investment. What do we mean when we say this? It means that any instrument that is backed by real estate delivers to the investors potential for capital appreciation, for growth in rental yield, and depreciation in debt. So take for instance, if I bought a property off the market at $10,000 in 2010, or say in the Nigerian Naira, I bought it for 10 million Nigerian Naira. Today, there is the potential that that same property would have doubled in value to mark inflation. At today's market, the same property may now be worth about 20 million Nigerian Naira. Apart from that, the rental yield from the property would also have grown about the same value because typically the yield would always grow to match the rate of inflation. And finally, and most importantly, let's assume that I took a loan to buy this property in 2010 and I took a loan of 8 million Naira to add to what I had. So the value of that facility that I took in 2010 may have dipped in terms of value. And in actual terms, what the 8 million Naira that I took in 2010 may be worth in today's market may be, say, safely about 4 million Naira. What that means is I have gained significantly both in terms of capital appreciation, rental yield, and depreciation of my debt. Another thing is that real estate has grown to become the choice outlet for institutional capital. That is why you will see that there is hardly any institutional investor that would not have significant exposure to the real estate market. Why? Because there is an understanding that real estate is a stable and futuristic investment that has the capacity to deliver and to protect against inflation. Real estate enjoys or holds about 6% of the share of the global market capitalization. What this means is out of all the products in the market, 6% of all the instruments that are being traded in the global capital market are backed by real estate. And finally, the size of the real estate capital market as of today is about 43 trillion United States dollars. We all know that PropTech has become a phenomenon in today's market. And the use of technology and digital innovation is now a critical factor in meeting the needs or enhancing user experience in the built sector. We have artificial intelligence, blockchain, process automation, robotics, big data or data analytics, virtual or augmented reality, cryptocurrencies, smart contracts, and machine learning. I think that the real estate market has been one of the biggest users of technology. And this is very apparent in how in a lot of countries you can see a lot of startups in the property sector that are looking to drive innovation, change, and developments in the built industry. So talking technology markets and the future, what do we see, or what does the future portend for real estate, technology, and the capital market? One, I think that markets that fail to adapt to change will soon be completely non-existent. The market of the future is one that is smart, agile, and driven by technology. I think also that the world is becoming a single integrated market that is now eliminating geographical barriers. That access to real-time information and data is now crucial to corporate survival. I think also that technology has helped to lower barriers to entry for small businesses. People now have opportunity to make simpler, faster, and more efficient decision making because of technology. I think also that we are able to achieve quick transaction turnaround because of automation. And finally, I think that speed, virtual engagement, user experience, value addition, and price would be the major drivers of customer retention. So let's take a peek at the Nigerian market for a moment. The real estate capital market in Nigeria has a total sector contribution of about 4% of gross domestic product. This size pales in comparison to the contribution of real estate in other jurisdictions. In several other countries, you have real estate contributing over 20 and in some instances even up to 40% of GDP. In Nigeria, the popular products that we have on the market include IPOs, real estate investment trust schemes, bonds, mortgage-backed securities, real estate funds, and other unregulated structured instruments that are created to fund specialized real estate products. The sectoral market capitalization as at the end of 2019 stood at about 33 billion naira out of a total market capitalization of about 27.2 trillion. This again pales in comparison to the contribution of real estate to the capital market of many other countries. We have about 5 listed real estate investment trust schemes on the market that are listed on the Nigerian Stock Exchange main board. Also, there are about 4 listed real estate and construction companies in Nigeria compared to the several hundreds that you would find in other countries. What is the reason for this? A lot of people have said, and I think that I agree, that liquidity remains a major stifler of the real estate capital market. A lot of products that are listed on the market have suffered significant impairment on account of lack of secondary market activity after the first offering. It is said that this is because real estate instruments have delivered sub-market returns, especially in a country where the government is the major borrower and majority of the free risk instruments in the market are able to do double-digit returns, whereas real estate instruments have struggled between 6 to 8% for the best instruments that you will find in the market. The PropTech market in Nigeria is still very much in its infancy. As of today's count, there are about 55 startup firms that are offering services in the PropTech space. They represent about 1% of the total global market share for PropTech. Many of these PropTech firms in Nigeria have focused mainly acting as listing portals and co-living or shared community aggregators. As of today, there is not a single listed PropTech company in the market. And funding for a lot of these PropTech firms have come majorly from private equity. And as of today, less than $2 million have been invested from private equity into the PropTech space. We also find that there is very minimal legal regulatory responses in the PropTech market. In other countries, regulatory drive has been one of the major influencers of growth in this market segment. Very recently in Nigeria, the Securities and Exchange Commission has come out with an exposure draft of the crowdfunding rules, and we expect that over the next couple of months, there will be significant activity in this market. We also find that there are very few PropTech firms that are targeted at critical areas like finance and mortgage finance in the Nigerian market, and these are 2 areas where we have some of the biggest needs in the market. So where do we find the sync between the capital market and PropTech? Is there really a melting pot for capital market and PropTech? I believe that capital, innovation, and scale are the biggest impediments to growth of the real estate market. Therefore, what can PropTech do to deliver innovation, deliver access to capital, and scale? The property technology market is able to break down the barriers and give the capital market access to global capital that is required. PropTech is also able to deliver efficient title transfer processes and guarantee the integrity of title. One of the biggest challenges we have in the Nigerian market is the time to completion of sale and transfer of property transactions. We expect that in the mid to long term, we will see a lot of property repositories in Nigeria adopting this technology so that we can have a more efficient way of transferring title that is recorded online and real time. Big data is also a way that we can deepen the real estate capital market. Question would be, of course, how? With access to data, we can have smarter and more efficient investment analysis, which will lead to more investment in the market. A lot of institutional investors and even foreign investors have often said about the Nigerian market that there is not enough information for investors to make critical decisions about assets that are available for investment in the market. Another area where we expect PropTech intervention is in the area of alternative finance aggregation. Very recently, the Securities and Exchange Commission has just exposed its draft of the crowdfunding rules. And this means that the Nigerian market can now enjoy the benefits of aggregating funds for real estate projects through the crowdfunding platforms. Another potential area for intervention from the PropTech sector is smart contracts. Globally now, a lot of lawyers are beginning to push value through the use of smart contracts over digital platforms without parties having necessarily to sit or meet to close deals. We also expect that machine learning would help for faster deal identification, analysis, and execution. One other thing that I think that PropTech can do in the market is to automate the process for asset valuation. This would allow for the elimination of subjectivity, which is very, very apparent in today's market. Process automation can also be used to make trade and post-trade on the capital markets and other exchanges or capital trade points more efficient. I think also that virtual and augmented reality would allow for more experiential interaction with the market or real estate assets. This means that people can sit from across the world and actually have person-to-person interaction with real estate assets and determine whether they are interested or would like to make investments in these assets. I also think that we look to see a time when the blending of digital assets and conventional trading would happen on our stock exchange and other capital trade points, as is done on the ICE, the Jamaica Stock Exchange, the NASDAQ, all of which in recent times have either introduced or are working to introduce the trade of digital assets on their platforms.